Hi everyone, today's topic is about government insurance schemes. Okay, so the government has in place some insurance schemes for Singaporeans and PRs. So I'll be sharing with you guys about what they are, and also why you still should get your own insurance on top of these government insurance schemes. So let's go. Okay, so this topic is especially relevant for Singaporeans and permanent residents. So if you are not a Singaporean and permanent resident, you most probably won't have all this insurance. Yeah, but once you become a PR or you convert to a Singaporean, then you need to take note. Okay, so the very first one that I'll be talking about is a dependent protection scheme by Great Eastern. Okay, so this is a term plan that has no cash value. It's available to all Singaporeans and PR CPF members. Okay, so the premiums can be paid using your CPF, ordinary account or special account. Okay, so if your OA has not enough money, then it can be paid using your SA. So but this plan is auto enrolled when you reach certain age. Auto enrolled when you do your first contribution, but it can be actually cancelled lah. Although I would highly suggest that you don't cancel it, because you can see that the premiums are quite affordable. And it's what exactly is this insurance for is they will pay out the sum assured of these amounts when there is death, total permanent disability or terminal illness. Okay, so depending on your age, the yearly premium will change. So once you are over 35, it becomes $30. So before 35 is like quite cheap. Yeah. So when you reach 65 years old, by the time you reach 60 years old, the sum assured will drop to 55k. Then maybe by then the premiums might, if it doesn't make sense to you, then you can cancel it, or you don't need the coverage anymore, you can cancel it. But for now, when before you actually have kids or get married and stuff, right, you should still continue on this plan, because you don't know in future whether you can still be insurable. Yeah, so if you cancel the plan and you try to get back into the plan, then you'll be subject to underwriting. Yep. Okay, then this one I've talked about it before. This is the MediShield Life. So it's a basic hospitalization insurance. It's compulsory for all Singaporeans and PR. Okay, so when can you claim this MediShield Life? You must stay in a hospital for 8 hours, or you're admitted for a day surgery. So either of the two, you can claim your MediShield Life. Okay, so for the coverage of MediShield Life, I have talked about it at length at my other video. I'll put the link down below. Okay, so it covers B2 to C class ward. This is a very brief summary covers B2 to C class ward and does not cover pre and post hospitalization, which is why I would suggest that you top it up with integrated health shield plan. Yeah, so premiums can be paid using your CPF MediSave account, and the premiums increases with age. Yeah, so dependent protection scheme just now also 70k only. Definitely not enough sum assured unless you're earning 7k a year, which is quite unlikely. Yeah, okay, so you need to top up. Definitely need to top up your dependent protection scheme to make up for the correct coverage. Yeah. Okay, so CareShield Life. Okay, so it's this is also by the government, lifetime long-term care insurance for Singaporeans and PR that provides monthly payouts in the event that they become severely disabled. So what is the definition of severely disabled? It is based on CareShield Life, it's unable to do 3 out of the 6 activities of daily living. So what are the activities of daily living? Toileting, washing, eating, mobility. Okay I can't really remember the exact 6, but yeah, so this, as long as you can't do any 3 out of these 6, right, then you count as severely disabled. So all Singaporeans and PR are automatically covered when you turn 30. Premiums are paid using MediSave, CPF MediSave till you reach 67 years old, and then if you become severely disabled before you reach 67 years old, your premiums are waived upon any successful claim. So what you can do with this also can be upgraded, like the MediShield Life can be upgraded with supplements from Aviva, Great Eastern and NTUC. Okay, so the premiums is to be paid with MediSave. Can be paid with MediSave. Yeah, so also attach a link for you all to take a look at a comparison between the few insurers. I will not be covering that part because this is not the main part of what I want to talk about. Okay, you can do your own comparison to see which product suits you best lah. Yep. Okay, so next is CPF Life. Yes, this is actually an insurance plan. Okay, so it's a lifetime monthly annuity payout that starts from age 65 to 70 years old. Okay, so once you reach 65, you can start your CPF Life but some people choose to defer their CPF Life to like 70 years old. So 70 years old is the max that can defer your CPF Life to start paying out lah. Yeah, so all Singaporeans and PR automatically put on CPF Life once they have 60k in their retirement account before they reach 65 years old. So you can actually opt out of this CPF Life if you have a pension or a private annuity plan that pays same or higher payouts. It's actually quite unlikely that quite unlikely that insurers have a better plan than CPF Life. So definitely for most people, CPF Life will be part of the retirement planning process, but is CPF Life really enough just like for everyone? Even if you do the highest tier of the RA amount, right, is the payout going to be enough for you? If it's not, then you need to consider topping it up. Yeah. So basically for CPF Life, you can choose from 3 plans, either the escalating, standard or basic. So for escalating, right, there will be increasing payouts every year. That means you start from a low amount but increasing payouts every year. Then standard plans are higher payouts at the start, but they remain the same every year so not inflation competitive. And basic plan is a lower payout that get progressively lower with time Yeah, so what's the difference between these 3 plans? I mean, basic is like want to leave more for your children because after, if like low payout, that means definitely more in the CPF, then when you pass away, your beneficiary will get more Yeah, so that's the idea. Okay, so let's move on to a CPF Life example. Okay, so to receive a monthly payout of 1430 to 1530, right, you will minimally need 280k in your retirement account at 65. So this is with the recent trend. So by the time you and like me and you reach 65, right, this amount will not be the same So it's now for now, like people reaching 65, then this is relevant. Okay, so a much lesser sum of 186k is required if you set aside the amount in your RA at 55 years old. This is because the CPF interest rates of up to 6% will help you to grow your savings through compound interest. Okay, so 6% is actually very good for a capital assured plan Yeah, so definitely with like insurance out there, I think the maximum you can get is only 4%. So yes, CPF Life is definitely a very attractive annuity plan that everyone should participate in That's my opinion. Okay, so so this table shows like if you desire a certain money payout, then how much you need to have in your retirement account that you can enjoy the payout. So if say this, most people I think quite a number of people do have this amount, so they can only get, even if they put in, they leave this 280k in their RA at 55 years old, right, they can only get about 2,000 plus per month. So if they are living those kind of like travel the world lifestyle, definitely 2,000 a month is not enough. So they need to find a way to supplement their income from other sources, like other annuity plans or their own investment, rental, basically other sources of income lah. Yeah. So this table projection is based on the CPF Life Standard Plan. Okay. So like I mentioned, these amounts will change gradually. So by the time you reach 65, definitely 280K is not enough for us to get like the monthly payout of this amount. Yeah. Okay, so lastly, we have the MINDEF and MHA group insurance with Aviva that is available mostly to NS men. So there's two schemes under this group insurance. One is the core scheme, which is like paid by MINDEF. So it basically don't need to pay any premiums for NSF, NS men, regular servicemen and volunteers lah. So this scheme covers until 65 years old, 150K group term life for death, TPD and terminal illness. Okay, terminal illness I mentioned in another video is you are diagnosed with a disease that you will most likely pass on within a year. Yeah, so it's actually a death plan. And TPD and the terminal illness are like accelerating riders, so it accelerates the death plan. So you say you get terminal illness, right? Then they should pay out the 150K, then there's nothing left when you pass on. Yeah. Okay. Also covers 150K group personal accident for accidental TPD, injuries and fractures. Sorry, this is not TPD. Total permanent dismemberment. It's like lose certain parts of the body like finger or yeah, so not say like lose the whole hand, that kind of thing. There's a certain table of schedule like percentage that they will pay out when you lose certain parts of your body lah. Yeah, so for fractures there's also some payouts. Okay, then everything must be related to an accident before you can claim from this accident plan lah. Okay, so there's also a voluntary scheme. So after after the NS people leave the NS, they can top up their with the voluntary scheme. So the voluntary scheme lasts them until they are 70 years old. So basically you can choose from the various coverage lah. So these are the eligible people who can buy the voluntary scheme. Okay. Then basically group term life like I mentioned is for death, TPD and terminal illness. So you can buy a maximum of 1 million, and then there's some small benefit of getting a daily cash benefit, a hospital cash benefit if hospitalized due to illness or accident. But it's only payable from day 11 onwards lah. It's actually quite unlikely that most people stay in the hospital for more than 10 days, so most likely you will not get to enjoy this benefit, and even if you enjoy this benefit, it's not really like enjoying. Yeah. Okay, so the maximum they will pay out is for up to 30 continuous days lah. Yeah. Okay, then group personal accident. Just now I explained what is group personal accident. It's cover up to a maximum of 600K. So all this, right, there's probably underwriting exceeding some amount. I read about it, but I can't remember which amounts there will be underwriting. Yeah, so it's not say that you definitely can get all this coverage. There is still underwriting. Okay, then so those two are the main plans, like same as the core plans, right? But they are voluntary that you can add on and need to be paid in cash lah. Yeah, so whatever you buy from there, the group term life or whatever, you can add on the optional riders of living care rider. So living care rider is up to 350K for major CI, and living care plus is up to 300K for 10 different early CI. Yeah, so this early CI coverage, right, is only early and intermediate. So if you want early, intermediate and major, you need to buy A and B lah. You cannot buy B only. Yeah. Okay, then there's also disability income, whereby they will pay up to 50%. Disability income relates to work disability lah, so they will pay up to 50% of your own monthly salary that you need to buy up to 50%. So if you buy only 10%, then of course you get 10% lah. but the maximum you can buy is 50% of your monthly salary. So you need to prove that you actually earn that monthly salary, then you can buy 50% of it. Okay. Then maximum of 120k annually means 10k per month. And then escalation, there was also an escalation of 3% annually. So yes, this plan is actually not bad, depending on the premiums. I didn't really explore the premiums, but from what I know, right, because it's a group plan, then group plans are usually cheaper than personal plans. It's because how the group is structured, right? Because in a group, usually there are bad, like people who are bad in health, and some people are good in health lah. But when people actually buy insurance personally, usually they are not in good health. That's why they feel the need, right, to buy the insurance. People who think they are very healthy, they won't ever buy the insurance one. Yeah. So there's also a pricing difference for group and personal insurance. Is because personal, like I mentioned, there's a moral hazard moral hazard. So there's a premium pricing for the moral hazard. That's why for individual insurance is usually more expensive than group insurance. Okay. Then there's this tiny outpatient Medicare. So only insures like, I think maximum 2,000. Not very attractive lah. I never hear really people take up this plan also. So I think only the top ABC is important, like D is not very important. Yeah. Okay, then lastly, if you got the HDB, yeah, so it's only for HDB. There's this home protection scheme. So you will fully pay for the house in the event of death, TPD, or terminal illness. Yeah. So it's for CPF members, like I say, Singaporeans and PR with HDB flat and paying the monthly housing loan. So what it will do, right, is either pay your monthly housing loan until you reach 65, or until your housing loans are paid up. So if you, by the time you reach 65, all your housing loans are paid up, it's also, the plan will also end. So the maximum coverage is actually 65 years old. So the premiums is paid with your CPF OA. Okay, so this is actually sort of like a compulsory scheme unless you can prove to HDB that you can be exempted lah. So when can you be exempted? If you have a whole life, term insurance, endowments, or like life riders or mortgage reducing term insurance that covers you until you are 65 years old lah. For like the outstanding housing loan up to the full term of the loan, whichever is earlier lah. Yeah. So if you don't fulfill these conditions, you need to pay for your home protection scheme lah. Yeah. Okay. And lastly, I would like to share why you should buy insurance now and not later. Okay. So just don't leave room for regrets lah. Yeah. So some of my reasons, here we go. Okay, so let's explore what happens if you really just wait and see, and then you want to buy later. Okay, so what's the consequences? Okay, premiums get more expensive, the coverage period is shorter. So like let's say you buy like life insurance, so life insurance you will cover at least until 100 years old. So if say you buy at 20, right, it covers you for 80 years. Then the premiums are cheaper. But let's say you buy at 50 years old, okay, the premiums are maybe 10 times more expensive, and your coverage period is only 50 years. So what's the point of buying later? There's no point. You should be buying it earlier lah. Unless you really think like nothing will happen to you for the whole lifetime. Yeah. I mean, if you really think that, then you can be like a fortune teller already lah. I mean, it's not like you can anticipate what will happen, right? Okay, so also if you buy later, it might not be even offerable to you. So many people were rejected their insurance applications because of poor health. I've seen really a lot. Okay, and then you buy later, more loading, more exclusions. So loading is usually when you are fat or you have some certain conditions that the insurer wants to, I mean, like think you are extra risk lah, so they make sure that you pay extra premium. So like maybe say 100% loading means like I'm paying 100 and you are paying 200, that kind of thing per year. So it's can be very much more costly lah if you buy later. And then like I say just now about moral hazard, right? Yeah, so you need it more, that's why they also know you need it more, so they will definitely give you the higher price lah. Yeah. Okay, so another bad thing about buying later is getting exclusions for certain body parts lah, like because they are considered as like pre-existing conditions lah. Yeah. So if you buy later, sometimes like you say you want to buy a CI insurance, then suay you already kena some CI, then you think you can buy more CI? No, you cannot buy anymore already. Most likely they will reject you for future CI applications. Even like let's say we don't count, like maybe you get cancer already, then they say exclude cancer. No, they will not even allow you to buy, or maybe loading. I think it's most likely it's not allow you to buy lah. Yeah. Okay. So what happens if you buy later also, because like due to your poor planning, right, you are now also less in control of your finances, because like I mentioned, the premiums are more expensive. Definitely you'll be less in control of your finances. And also one thing is when you're older, there are less options available. So because of the way some plans are structured, right, only when you buy much younger, then you have the premiums are really affordable. But if you buy much later, really like the premiums are too high that you cannot be affordable lah. So it's much less options. So maybe you can only go for the short term plan, that kind of thing. Yeah. Okay. Another thing, if you buy later, so let's say I am 50 years old and then I'm really very fat already, and then like I don't know when I will kena heart attack, stroke or whatever, then I buy the insurance, then I still need to wait like 90 days before I can go and see doctor, or like I can get diagnosed with a CI, then I can get my payout. Like you don't want to worry about that, right? You just get it as early as possible, then get your peace of mind for the rest of your life lah. Yeah, so that's what my opinion is. Okay, then are these the only thing that happens if you buy late? No, so these are the general reasons which are applicable anytime lah. And now why it's so relevant is because it's the pandemic and many things are very unpredictable lah. Increased risk of critical illness, death, and TPD all around the world. So all this can like lead to increased premiums. Yeah, so too many unknown nowadays. Are you prepared for it? Okay, so the government also say it. So recently I read this article. It's about the Omicron variant. So when faced with unknowns, we buy insurance. So Mr. Ong already told you to buy and then you don't buy. What are you doing? Okay. Okay, so just share with you some stories about people getting rejected for insurance. Okay. So all these are actually real life people that I know that they have certain conditions and they are rejected. Okay, I just list some lah. Yeah. So one guy is a thickening heart, guy A lah, thickening heart muscles, pre-diabetes and also hypertension. Totally rejected. They don't even care whether you are low, your pre-diabetes is how high or how low or whatever. Because you got multiple conditions, they totally don't bother. They just reject you. Yeah. Okay. B, injured and have surgery, so excluded for his knee and stuff, and because of the surgery he haven't fully recovered, he was also like totally rejected lah, because you need to be fully recovered before you can do the application sometimes. Yeah. So just now this one is multiple conditions. So actually pre-diabetes is a single condition that also can get you rejected for insurance already. Yeah. Another one, schizophrenia on medication. So yes, mental illness can actually get you rejected for insurance as well. Okay. This person I know has a critical illness before, so also rejected. Okay. Another one, went for health checkup and then there were elevated levels of certain things, so they because it's like too near the insurance application, right, they totally just reject it. So they like maybe tell you to try a few years later. So you try a few years later, you might your premiums increase, right? Yeah, so whenever you can get insurance, just get it lah. Yeah. Okay. Story time on exclusion and loading. Okay. So person G, digestive system. Okay, so to be honest, this my husband is excluded for his stomach. For all stomach related complications also excluded. Yeah. Okay, person H, lump on shoulder. Exclude all current and future lumps. So this person had a lump on the shoulder, right? It's just a tiny lump like that, and it's been around for many years, but the person refused to get it checked. So, but she don't want to buy insurance, so it's the insurer just exclude the lump and all future lumps. So in a way, it's kind of like unfair, but so like say if like the person develops like cancer from a lump, right, then it's not even covered also. Yeah, so really very important to buy as early as possible when you're healthy lah. Yeah. Okay, so another person that I meet, exclusion for ears and the breast. So for females, right, it's very common to have breast cysts. So even after you remove your breast cysts and whatever, right, so like doctor say you remove breast cysts, doctor won't say that you will never get breast cysts again. Yeah, so exclusion for breast cysts lah. Yeah, and also ear, like some people sometimes like ear stuck go and see doctor then the doctor don't know write what so like try not to anyhow see doctor because when you anyhow see doctor and you haven't buy your insurance, right, then there's a record in the system and then you can get the exclusions lah. So recently I also saw this Reddit things that say like you go and see doctor due to like menstrual cramps, right, you can actually get exclusions for female reproductive system. So really don't anyhow see doctor before you buy insurance. Yeah. Okay. Then some people got exclusions for their knee. Okay. Then another one that I know got 100% loading due to BMI and hypertension. Yeah. Okay, so about the insured event has already happened. Okay, and yeah, so this person cancer diagnosed on day 89 of the waiting period, so not able to claim. Unless the insurer give you goodwill, then still let you claim lah. But why you want to toy with that? Just buy as early as possible. Right? Yeah. Okay, another story. This is not my personal story, but like guy signed a plan, then flew off without making the premium payment. He died on the trip, then family left with nothing. Can you imagine how you feel? Like why your stupid husband never go and pay the premium? Okay, but never mind. So another one is cancer payments treatment have a lot of outpatient costs that is not fully covered by Medishield, then a lot of costs stacking up, and then like all the other family members have to contribute and pay for it lah. So don't let this, getting the hospital plan is not enough. You need to get a critical illness plan as well. Okay, is to cope with outpatient costs and also your daily living costs. Yeah. Okay, so another one is wait, then a heart attack happen then uninsurable plus got no payouts. Yeah. Okay, so another person want to save a sizable sum of money first before buying insurance. Then 1 month before he intended to buy, right, just save enough money, right, he found he got cancer. So too bad lah, cannot buy already. So really don't wait lah. Yeah, so there's really no reason to wait. Even if your finances are low, right, buy the minimal coverage at least. Yeah. So yeah, really just think about it lor. What if CI happens tomorrow? Can you guarantee it won't happen tomorrow? Are you financially prepared for it? Okay, so I finished with the slides. I want to share with you all a video that I saw on YouTube. So I'll be sharing it. Please enjoy. I really hope this video has helped to inspire some feelings and thoughts so that it will inspire you to take action of your financial protection. Well, if this is not enough for you to get protected, I don't know what else can. Yeah, maybe I'm just not good enough to convince you to get protected. Yeah, so anyway, that's what I'm here for, to get you protected. Or if you don't feel comfortable with me, you can go with anyone else that you want to get protected with. Yeah. Okay, I hope you have learned a lot from today's video. And that's the end of our video today. Thank you everyone for watching. Bye bye.